The question really is whether this is sustainable. This is the market's driven by sentiment rather than fundamentals at this point in time. So when EMs get sold off, Thailand may be in that category as well.
Yep. If you look at since the beginning of the year, that's the fact. You see a lot of money going out of the country, even though the economic growth has been going up during the first 6 months, 4.8%. The export growth more than 10%, and actually the liquidity in the market is at $2 billion per day. Like you said, the market has been driven by the emotion and sentiment. But once you realize how strong the economy is, like in Thailand, the GDP growth, look at all the sustainable consumption development, look at the government expenditure, look at the number of tourists that come into the country. These all factors contribute to the growth of the Thai listed company to be increased almost 10% during the first 6 months. So that's why I would say that when you combine all these facts, the investors start to realize and come back into the market.
But despite all of that, $6 billion have already made an exit from the Thai market. What are you doing to contain that?
Think about this number. 5-6 years ago, that is huge. But now our market cap has been going by almost threefold during the past 10 years. The liquidity has been going up twofold. So $6 billion actually is not that big compared to our market depth and our liquidity today. However, certainly we concerned about that. How can we attract those money back? I think today even and the number that come out has been a good information for investor to digest whether this is a right time to come back. When you look at the economy, it's growing. When you look at the performance of the listed company, it's getting better. So that is why I think the Thailand focus this year is at the right time. We want to show them that, hey, you don't have to wait. For Thai economy at the moment, the well-being economy has been doing very well. Financial sector has been doing very well. Energy sector, and these three sectors actually combine more than like 60% of the market cap of the Thai listed company. So that's why I would say that it's a right time.
In terms of fundamentals, they look fine, but politically, there's some questions because elections have yet to be called, and there's growing concern that that could lead to protests in the country, and that's always been the issue in Thailand, the coup after coup after coup. How will this play out in the markets?
First thing, when you look at Thailand during the last 10 years, you can see that the GDP growth is around 3%. However, the listed company performance has been outstanding. Our profit growth has been more than 3 times of the growth rate of the GDP. Why? Because in Thailand, when you look at the political situation and economic or business sentiment or business condition, it's actually quite separate. Thai business nowadays actually has been expanded globally and regionally. When you look at the number of the Thai listed company who announced their source of earning, 47% of their earnings actually come from outside of the country. So you can see that, okay, the politics situation is important. It creates stability, it creates certainty. However, when you look at the GDP growth, you look at economic growth, actually it depends a lot on the policy of the government to invest in the infrastructure, on the consumption, on the investment, on the tourist industry. So you can see that political situation is important, but it creates more stability, and business situation actually go on by the long-term decision of the business side.
Do you agree that some are now saying that perhaps the elections would lead to a rally in the Thai stock market?
Political stability certainly create comfort zone for the investor because now they believe that, okay, once we have an election, certainly we will understand more about the direction of the economy. I agree with that. However, like I told you before, sometimes when you look at the development of Thai country, the development of Thai economy, it actually is not that interactive between the political situation and the business situation.
We've seen an extended period of sell-off in the emerging markets. Do you think we've seen the worst of it?
When you look at since the beginning of the year, there are 3 big uncertainties. First, you see the rise in the interest rate in the U.S. You see the contraction of the balance sheet of the central government in the developed country, and especially you see the uncertainty on the trade situation between the U.S. and other countries. Those are 3 uncertainty, big ones that we never seen before. But now once we start to digest and realize all this, the effect of these 3 factors, I would say that emerging market are much better in situation than at the beginning of the year.
Khun Bagon, you've embarked on the reform agenda for the stock market. What's next? What can we expect?
When you see how Thai business get access to the capital market in the past, we have been doing quite well on small and large, big-size company. In the future, what we are trying to do would be how can we give access more to the smaller company like startup or SME and also international businesses who do the business in Thailand or in the region. Those are the two main areas that we certainly want to provide more services for them to get the funding and for the investor to have an access to these type of new companies.
In terms of IPO, how much clarity do you have and how much funds do you think it will raise by the end of 2018?
Sure. During the past 6 years, when you look at the average number of the activity and the amount of the fundraising in Thailand, it has been one of the biggest venue on fundraising in Southeast Asia. On average, we have a new something like 40 IPO per year during the past 6 years, and the size of the IPO around something like $6 billion US. And we expect that to remain in the near future.